All right, we have a we have a big agenda today. We're going to go in lots of different directions and hopefully provide you with some information that you can use out in the field with your buyers and sellers, and kind of give you a market insight on what's happening so that you can react to it as you're out there selling on a day-to-day basis. The main topic that we're going to deal with today is called 10 Real Estate Trends in 2022. And I've garnered these trends from a real estate economist, which you'll see who that is when we get to the part in the presentation. A guy that's been in the real estate business for a long, long time, has seen a lot of different changes, and he had some pretty interesting things to say. Some are probably some things that won't surprise you. Other things maybe scratch your head a little bit. So I thought I'd share them with you this morning. Colleen's on the call. So if you have any kind of questions, want to drop things in the chat box, she'll be monitoring that. We're going to get started here this morning with Dan and James. And James is the one that's going to be speaking this morning. So James, good morning.
Good morning, Tom. Good morning, everybody. Just a quick update when it comes to interest rates right now. I've recently been getting, within the last couple of weeks, a lot of people reaching out, oh, I want to refinance before the rates go up. That ship has kind of sailed as far as the rates, eventually going up. We're already there. Conventional rates, we're really creeping into the lower fours now for conventional financing. Government loans, we're still high threes, but kind of where we were at a few months ago, it's changed pretty dramatically. So one thing that we just wanted to touch on today, when we have somebody, especially somebody that maybe we pre-approved a few months ago, we take a look at those rates and see where they're at now compared to back, maybe October or September, when we originally pre-approved the individuals. And we want to make sure that they still qualify with the elevated rate, but we also want to have those conversations with people so they don't have the sticker shock when they look at the cost sheet and it's like, wow, my rate was 3%, a few months ago, and now we're at 4% or 4.25%. So just be aware of that, and that's something, if you're utilizing an outside lender, reach out to them and really make sure when you're going to show houses for some people that maybe were dormant for a while, make sure that they're still going to be good in that price range, because a point difference in rate can really take a strong pre-approval and make it a little bit dicey. So that's something that we just wanted to pass along. Who knows? It's very volatile right now. Friday was just awful for rates, and it's kind of stayed where it was at on Friday. So hopefully we'll get a bounce to lower rates in the coming weeks and months. But right now we're really navigating a tough time when it comes to rates. Though the grand scheme of things, the rates aren't that bad. If we're at 4%, we could be a lot worse. So hopefully they don't creep up too much higher, but we just want to pass that along to let you guys know if you weren't aware.
Thank you, James. And we're going to talk a little bit about rates coming up in a couple slides and how it relates to rental payments, because as James indicated, rates are going up, which is affecting your monthly payments. But you'll be amazed at what the average rental payment is right now. And James also said, and I hope everybody takes it to heart, is that 4% is, in the grand scheme of things, good God. The old man in me, when I got started in this business, they were at 16%. So just imagine what a 16% interest rate would look like with a monthly payment today. So in the grand scheme of things, James has his arms around what's going on. So thanks, James. Appreciate it. Next up is Sarah.
Good morning. Hope everybody's staying warm. This weather's been kind of crazy lately, but so I kind of want to piggyback off of a little bit of what James said in regard to people wanting to refinance. Keep in mind that when your clients come to you asking for advice about refinancing, or say, hey, look, we're going to refinance, we're not going to move, you can refer them down to us and we can help your clients with their refinance, just like we did their purchase. That way you can kind of help guide them if they have any questions. And then you can, kind of keep it all in house. That way you can provide your clients excellent service as well through the refinance. That way when they do go to list or buy, they'll remember, hey, they helped me with my purchase, my refi, they were there every step of the way. Let's give them a call. So now we're going to buy a house. We wanted to put out there to all of you agents, we are interested in doing potentially a lunch and learn, and we wanted to find out from you what you would like to be educated on from title. So if you have an idea or there's something you want to know a little bit more about, you could please send me an email and let me know what topics you would be interested in, and then we will put something together. Last but not least, we actually have a Valentine's Day goodie bag. I don't know if you guys can actually kind of see what's in here. A bottle of wine, some chocolate, and we're going to ask a trivia question, and Alexis is going to monitor the chat, and whoever gives the answer first correctly will win the goodie bag. So the question is, what was the title for individuals who performed abstracting originally? Tom's laughing because Tom, do you know?
Sarah, the only thing I didn't hear anything after you said a bottle of wine. That's all I heard.
Oh, yeah, a bottle of wine. Any guesses in the chat? No, Carol, that's not right. Any other guesses? What was the job title for individuals who first performed title abstracting? Give it another couple seconds. Nope. Bob, that's not right. Any other guesses?
Oh, Dave Lowry got it.
Dave Lowry got it? Good job, Dave Lowry. You can come pick up your Valentine's Day goodie bag with a bottle of wine that Tom probably wants. But keep in mind, this actually was on the Homesale Settlement Lancaster Facebook page. So we want to encourage all of you to go and like that page so you can get title trivia, see what's going on. There's helpful hints, and just to connect with us or tag us if you have a closing or something along those lines. But Dave, stop in and see me, and then you can pick up your goodie bag. That's all I have.
And Sarah, before I go to the next slide, because I can't see the chat myself, can you verbally say what the answer is?
Conveyancer.
Ooh. Wow.
I know that's a big word.
I know. Little too long at this part of the morning, but whoop.
Perfect. Oh, am I still on, I guess?
You are.
All right, so I know we did this a few years ago, and the nerdy side of me loves this holiday just because it's a math holiday and no one ever celebrates it, but I think it's wonderful. And we're going to celebrate National Pi Day. If you don't know what pi is a term in math 3.14. So we're going to celebrate it on, on March 14th with all different types of pie, pizza pie, regular fruit pies, and we're contemplating doing some type of a pie bake-off to see who has the best pie in the office. So stay tuned for some more details, and we really want to see everybody come on out and celebrate Pie Day with us.
All right, Sarah. Keep your eyes open and your emails on. Sarah's going to give you some more details. I know there was I was privy to some emails that went back and forth between Sarah and James Ream, and James said he's never baked anything. So just a word of warning, if James bakes a cake, don't eat it.
Yeah, you don't want that. You don't want that noise.
Next up is James White with Homesale Insurance. James.
Good morning, everybody. I just had a couple of slides on something here that I had ran through with a customer about a month ago, I would say. And I just wanted to show the impact of insurance claims on a homeowner policy, basically on the pricing, basically. So the buyer of the house, it was a bi-level home with a Lancaster address. I think it was Manheim Township, if I remember right. And there was a recent roof replacement, had about a $350,000 replacement cost. So this is a house that most companies would want to write. And I quoted initially with Lidditz Mutual, and it came back at about $900 a year, approximately. So then what I did was I ran what's called the clue report. And I know we had discussed this about 1 or 2 meetings ago, I believe it was. And we came up with the customer having 2 claims, basically. And as you can see, those dollar amounts there, they totaled $600, basically. So after that, if you look at this as well, too, you see with Nationwide, with Safeco, with Travelers, they cannot write a policy there because of the number of losses that the customer had. And it surprised me as well, too, because I did sell this policy from what I remember, but it surprised me. If you look at the Lidditz Mutual quote, it basically went up, what was it, $350 almost, just for those 2 very small claims. And they were actually 2 claims with their cell phones. So their previous home company must have offered some sort of special coverage for cell phones. And I think it was, if I remember right, both of these were the cracked faces of cell phones, basically. So, you know, $600 cost them almost $350 in year 1 of the homeowner's policy. So that's just something I just wanted to share with everybody regarding the impact of claims.
And James, not to put you on the spot, but I'll put you on the spot here. Just a question for you. If I'm a homeowner and I'm presently in my house and I've made 3 claims in the house that I'm in, but now I sell my house and I'm moving to house number 2, does it affect the rate where I'm going? In other words, the house that I'm buying, or is that all left behind that, that I made 3 claims on my previous house?
Yes, it's going to affect it because the insurance company is going to look at what they call the subject, which is the person, basically. Okay. And that's it's basically like if you think about it like your car. If you get a new car, your previous driving history is going to follow you as well too. So your claims history on the home is exactly like your auto driving history.
Okay, thank you. So you can't run away from your bad stuff in your past.
Time's the only thing that'll do it. Basically, some companies look back 3 years, some of them look back 5 years on their claims history on the home. But definitely for 3 years, they're going to be looking at that far back at a minimum, 3 years.
Okay, thanks, James. Appreciate it.
Yep.
Up next is our Cinch Home Services representative, Desmond George. I know Desmond hasn't been with us in a while because of COVID. And I actually saw him in the lobby in person for the very first time. Desmond, about 2-3 weeks ago? And
about 2 weeks ago, yeah.
About 2 weeks ago, I walked into the lobby and he was talking to Janice. And when I meet people for the first time, I usually, because of my height, am looking down at people. Desmond and I are looking eye to eye. So he's as tall as me. He's a tall guy. So Desmond, welcome this morning.
Thank you, Tom. And I haven't seen a lot of you this year in this format, so Happy New Year to you. I just wanted to take a few minutes to tell you how much myself and Cinch truly appreciate your support with our warranties with your clients last year. Your office was actually one of the ones that we had a higher capture rate in a tough market for us. As you know, the real estate market was historical last year for a number of reasons. We had over 6 million sales nationally from the information I've been reading here. The median home price in Pennsylvania was $193,000. This time on listing was 9 days. only 3 months inventory. Folks were paying way over the odds for home prices. In all, what I'm trying to say here is it was a crazy seller's market, which wasn't a good market for my company, as well as the other warranty companies in the area. What myself and my colleagues will be doing this year is re-emphasizing with you guys how much the benefits are still very important for your sellers, your buyers, and yourself. The warranties still essentially provide free coverage while it's on listing. It prevents any backup of the settlement date for any unforeseen issues with appliances and networks. It sort of provides peace of mind for your buyers, who are cash struck, and it mitigates that risk of either replacing or repairing those household appliances or networks. And more importantly, for yourselves, it provides coverage and protection with errors and omission issues that may arise out of those transactions. So basically, our message is going to be, now more than ever, you need to place those warranties on those transactions. I mean, your sellers and your buyers, they look at you as the experts. And I'm sure, they will listen to you if you explain that this is an essential part of the transaction. And obviously, as always, if you have any questions, problems with claims or anything, please reach out to me. I believe, just like Sandy said, I'll be more than happy to do some lunch and learns or Zoom, whatever format is comfortable for folks. And I look forward to seeing you guys at the gala. I believe it's early March. Is that right, Tom?
Yes,
March
correct.
3rd.
Mhm.
Look forward to seeing you guys there. And thank you. That's all I have for you.
Thanks, Desmond. And I just want to let everybody know, on a monthly basis, I get reports from Cinch and from Desmond, and it basically shares with me as the manager of the office how many warranties were sold. It also gives me an opportunity to see how many claims there were with these warranties. I got to tell you, the number of claims that come through where things need to be fixed or replaced, it's incredible how much this can add up to if you just aren't aware of it. I see it on an ongoing basis. So Desmond, thank you for all your hard work with warranties with our office. By the way, you'll see Desmond's cell phone and email address here. Please obviously write that down. These slides will go out afterwards, so you'll have the opportunity to put this into your database. But if you're having questions or you're having issues, please pick up the phone, give Desmond a call. He'd be more than happy to help you out. Thanks,
Absolutely.
Desmond, for being here this morning.
Thanks, Tom. Thanks, guys.
Okay, so we had something called a Google migration. And some of you, and I just learned literally last evening, and I was discussing with Colleen before I came on the call here today, a lot of you have forwarding services from your regular account to Homesale or whatnot. And those people, at least last evening, were not getting the email. So some of the people didn't get the email link to this because it went to their regular email address and it never got forwarded. So they will be able to look at this presentation as time goes on when I publish it. But we will get through this. There are some bugs. There are some things that we're working with right now. Our IT department is doing a phenomenal job. But as you might expect, there's a lot of issues right now, individual issues with cell phones, people not understanding how to do certain things. By the way, Janice and Marion here in the office, I have dubbed them my IT assistants because they're fielding a lot of calls. They don't have all the answers, but they can certainly try to walk you through some really basic stuff, as I can also. So just wanted to make you aware, we are mainly through the main part of the Google migration. It's now just kind of cleaning up some of the stuff after the fact, but we will get through this, and it's going to be a great system to work on in the months and years ahead. So I wanted to make you aware of a change that NAR did with IDX. As many of you are aware, if you have a website where you have IDX on, it means that you can list other companies' listings on your website. We do it on homesale.com. There's a variety of different websites that have that. Well, there's a lot of pending lawsuits out there about what is on these websites. And one of the pending lawsuits that's out there is how these listings are displayed on other people's websites. The home's there, the information's there. You're supposed to have the individual or the company's name there, but sometimes it's so small that nobody can see it. NAR went to, at their last national meeting, basically made some changes. And here is the change that they've made that have actually been incorporated on homesale.com now for almost 30 days. So as of December 31st, all brokers are now required to display the phone number or email address of the listing brokerage company on the details page on the websites. So on the right-hand side here, you will see a listing that I pulled off of homesale.com, and you will see the picture and you will see who it's listed by, and notice that underneath the listing agency is the listing agency's phone number. Some of you may be asking, why are we handing that out? Why wouldn't we just have them contact Homesale? It's really because it's been dictated as policy by NAR. So we have nothing to do with that. That's why you're going to see these phone numbers on our website, in addition to all other websites that are out there that are IDX compliant. So I wanted to make, excuse me, everybody aware of that. So right now, there is our second Ninja installation going on in York. Has a nice crowd there. Some people from North Pointe are there. And one thing came through a couple of weeks ago where there's something called a Ninja Real Estate Review. And a lot of agents are trying to figure out, in the market that we're in right now, how do I get listings? Because listings are a premium and the listing inventory is low. Well, one of the things that the Ninja program shared with us is to do these real estate reviews. And here's all this is call and schedule a 15-minute meeting with all your past clients once a year. And when I say past clients, for those of you that are new in the business, this could be people that you know. And you're trying to get in front of them to share with them your knowledge, not only about yourself, but about their particular home. The review that you share with them should consist of a public records page, a comp page for the last time it was sold, if it's been relatively recent, all activity in the area the last 12 months, like the 3 best pending properties, the 3 best sold properties, something that sold in the last 6 months. Put this in front of people. I think you will be amazed. And I know Desmond talked about it a second ago, and we're going to talk about it coming up here. Appreciation rates across not only Lancaster County, but across the country have skyrocketed over the last couple of years, especially this past year. I don't think a lot of people are aware that the home that they're in, literally from 4 or 5 years ago when they bought it, what it's worth today. Let me share with you a slide. I pulled this from our MLS, all of Lancaster County. If you had a client that purchased a home in 2018, the average sale price at that time was $221,000. That same home today is worth $292,000. That was literally 3 or 4 years ago. It's gone up 32%. How many of your sellers know that their home has gone up 32%? I don't think a large majority of them would. So this is what Ninja is saying for you to do, is get in touch with your past database, get in touch with the people that you know, share this type of information with them. I'm willing to bet they're going to be shocked at how much their home is worth today. couple of other charts and graphs before we get into the meat. This is something I saw this past week talking about new residential construction and what has happened since 2016. Now, the squiggly lines that you see here, it's kind of tough to look at, but the light blue line is permits, the dark blue line is starts, and the green line are completions. And you see how this has trended over the last couple of years. Now, what I really want you to take a look at, which I think is a huge positive for our industry, is this. Look at the gap between the completions and permits in December of 2021. Permits are light blue, completions are green. It is widening, which means there's more people that are pulling permits at this point in time than at any other time in our recent past. And permits is kind of like a leading indicator of what's going to happen months later down the road when these permits are starting to be used and builders and developers will start putting product out there. So this is one of the leading indicators that I look at. Look what it's been over the last couple of years. That blue line has always in most cases, stayed above the green line only by a little bit and is now starting to widen, which I think is a great thing. So I think we have some relief on the horizon with new construction. And you also heard James Ream talk about mortgage payments and where they're going. And I think everybody knows they're going up. And James said, you got to look at this in the grand scheme of things. And this chart will definitely tell you what is going on in the grand scheme of things. So the red line, which I'm about to reveal, is the average rental payment from 2019 to 2022. And the blue line is going to be the median monthly mortgage payment for home buyers with a 5% down payment. So let's look at the rental payments and see what has happened. From just last year at this time, rental payments average were $1,645. They are now $1,877. That is a huge jump. I know this, and once again, I don't think a lot of people get this because they don't look at rental payments all the time. This recently hit home for me. As many of you know, my dad's going through a tough stretch where I'm kind of looking at alternative housing for him. And my sister and I are working with kind of divvying up our responsibilities of what to do. And one of the things that my sister was going to do was go out into the marketplace and look for potential rentals that we could get my dad into where everything's on one floor and it's very self-contained. And my sister did that. And she came back to me about 3-4 days after that and said, I can't believe where rental rates are. And she was quoting from just the small amount of complexes that she was looking at. She said they're $1,700, $1,800. It blew her away. Once again, she's not in the market for a rental, but you would be surprised at people who aren't in the market and when they go to rent something where it is. Now let's look at the median monthly mortgage for home buyers. It's $1,553. And as James Ream said, it's going up. Not only is the payment going up because of interest rates, but it's going up because the sale prices are going up also. But if you look at the grand scheme of things, if people say, well, I'm just going to wait to buy something, or I'm going to wait for those rates to come down, the alternative is what? The alternative is to rent something. And rental rates this past year went up about 14%. Mortgage payments went up about 21%. A lot of people are focused and fixated on the mortgage rates going up 21%. And they're like, oh, this is way too much. Look at it in the grand scheme of things. Look at this. You're still 20% cheaper to own than you are to rent. These are really important to know as people are making decisions about whether they want to own or rent a property. So I thought I'd share that with you here. This comes from the Market Simplified, which is keeping current matters. They put this out every single year, and this just came out during the month of January, where Gallup does a poll on the best investment you can make. And you see here, real estate tops the list, and it's been topping the list year after year for quite some time now. And in a second, I'll show you how it's actually risen over time. But you see how people feel about real estate in relation to stocks, gold, savings accounts, and bonds. And this is what's happened over time since 2011. In 2011, everybody was loading up on gold because, you know, we were coming out of the real estate, not the real estate, but the Great Recession. And look what has happened since the Great Real Estate Recession, or the Great Recession, I should say. Real estate has continued to climb and outperform these other investments. You ought to be aware of that. Also, I read this past month, Appraisal Measurement Standards. Now you look at this and you say, well, God, how does this affect me? Well, you'll see in a second how this is going to affect you. And by the way, what I'm going to share with you here is only for Fannie Mae loans, not Freddie Mac. So appraisers right now are going to be required to use what is referred to as ANSI, A-N-S-I, which is the American National Standards Institute of Measuring Standards for measuring, calculating, and reporting gross living area and non-gross living area of properties. Well, that's a whole bunch of gobbledygook, and everybody says, yeah, well, how does that affect me? Well, let's look at two different examples of how this is not only going to affect appraisals, but is going to affect how you perform a CMA. Here's the first. Probably about 20, 25 years ago, there was a trend, which continues today, to have all these open spaces and open areas in homes, two-story foyers or areas on the second floor that look down over this elaborate great room or family room. Well, take a look at this. The GLA calculation does not include openings to the floor below. Staircases are included in the GLA of the floor from which they descend. Now that can be difficult to understand, and you have to read it 2 or 3 times, but let me put it to you in your terms. A lot of real estate agents, and by the way, for every time that I have one of these open staircase or open to the family room, if you talk to 3 or 4 different realtors, everybody gives you a different formula as to how you calculate the square footage. Some people say, oh, these open space areas multiply times 1.5 times. Other people say, well, it is volume, so you can count it. This is basically saying you cannot count these open space areas. If you think about some of the homes that you are in or you've gotten in over the last couple of years in real estate, this is going to have some big impact on how things are reported on appraisals and how you do CMAs, because if you have large open space areas, that area on the second floor that is open to the first floor cannot be counted. Once again, let me say that again, cannot be counted. So this is going to affect the square footage of what you're dealing with right now. By the way, I think these are scheduled to go into effect on April 1st. Here's another one, or another part of this where it will affect it. Cape Cods and these areas where you have square footage on the second floor. And if you're like me, because I'm 6'3", I bump my head in the side walls of these things because they're coming in. Here are some other rules. Finished areas must have a ceiling height of at least 7 feet. And by the way, I have been in some 2-story old homes, row homes and whatnot, where you get up to the second or third floor and the ceiling height is less than 7 feet. That square footage will no longer be able to be counted. Think about that. And also, in a room with sloped ceilings, which happens in Cape Cods, at least 50% of the finished square footage of the room must have a ceiling height of at least 7 feet. and no portion of the finished area that has a ceiling height of less than 5 feet can be included in the gross living area. That's going to change some of the square footage that you put together in your CMAs and that appraisers are going to be putting in their appraisals. I wanted you to be aware of it because it will impact how we do business and what we convey on to sellers of properties where they're asking us, how come this area is not included? Well, it's going to be uniform across the board now. Just thought I'd share. So, top 10 real estate trends in 2022. There's a lot of lists out there, and everybody makes predictions and everybody says, here's what I think is going to happen. This guy right here, Matthew Gardner, who is the chief economist of Windermere Real Estate. And if you know anything about Windermere Real Estate, they are the second largest independent real estate company in the nation. They have their own economist. Windermere basically does most of their business on the western shores of the United States. So they are in Oregon, Washington, California, those type of states, but a huge, huge real estate company. And this guy, Matthew Gardner, I follow him, I read his stuff. He has a lot of really good things to say about the real estate market and very insightful stuff. So when he came out with what he thought would be the top 10 trends in 2022, I took notice and I read it. Some interesting things here. First of all, I don't think anybody's surprised by this. His first prediction is home prices are going to continue to rise. There are some people out there that I am reading that are saying, hey, they've risen so fast, they now have to plummet back down to get to a more stable area. He's saying no, basically across the country, they are going to continue to rise. However, in Lancaster County, as you see in 2021, our rates went up 13.9%. He's saying on a yearly basis in 2022, he believes we're going to be at a more attractive 6% rate, which is still really good appreciation, 6%. Listing brokers, that means us. We need to be positioned to explain this to our clients who have really grown accustomed to reading in headlines how crazy the real estate market is and things are going through the roof. And by the way, 6% is a good appreciation rate. But in the past, and I just essentially talked with an agent yesterday who was sitting here in my office who said he put a property on the market for $399. He has offers over $500,000 on this property. And he's blown away. I'm blown away. Consumers are blown away. At some point, this is going to stabilize and you won't have that appreciation rate too much longer, in my opinion, and in his opinion also. So we have to learn to have the conversations with people about tempering their enthusiasm for what they think is happening in the market. Number two, the spring buying season may come earlier and be bigger than you are expecting. Why is that? Well, I didn't even realize this, but it makes a lot of sense. Companies nationwide, ourselves included, we had all these kind of unwritten policies of all our help going home and working from home. And then when they were coming back, we were going to formulate a policy, a formal written policy on what people can do from work and from home. And then all of a sudden the Delta and the Omicron variant hits. So now that's kind of put on hold again. But very, very soon, all companies across the country are probably going to come up with some type of policy where their employees are going to have, some will have the option to work at home. Some are going to have the option to kind of a hybrid to go between home and the office. And it's going to be solidified. And once that gets solidified, people are going to be more than willing to then make decisions about their housing. Makes a lot of sense to me. Expect some to start looking for a new home because the current homes just aren't equipped for remote working. And if you're anything like me, when I'm at home working, I'm working out of my dining room table. I could move to other parts of the house, but it's pretty convenient for me to get a cup of coffee while I'm working on stuff at home. But there's more and more people that are in my predicament. They're working out of a dining room table or their kitchen or someplace else. And really, the home wasn't meant to be worked that particular way. So I think when people are moving now, they're going to start to look at some things that are going to need to accommodate their work from home. Number 3, the rise of the suburbs. We have heard this, where people are going to probably move more to the suburbs because they can, because of remote working. But remote working will not be an all or nothing proposition. In most cases, it's probably going to be a blend. So you're going to have some people move to the suburbs, other people are going to stay where they are. And buyers will target locations that are still relatively proximate to their offices. I thought the following statistic that he shared was really telling. 84% of the people submitting change of address requests to the post office moved and stayed in the metro area in which they were already in. So they're not moving totally far away. They're still staying in the same area. They just may move to another part of the same area. Number 4, new construction is going to jump. You saw earlier in this meeting where I shared what was happening with new construction starts and completions and permits and things like that. The cost of construction is going to come down a bit from this year as inflation finally starts to taper. And I'm going to do one of these with hopefully inflation is going to start to taper, because I think we're all feeling the inflation, not only as we see it with new construction, but when we go to the grocery store, at the gas pump, so on and so forth. He is predicting 2022 to have single family starts in the 1.22 million unit range, and 2023 to have single family starts a little bit higher than that. Why is this important? These numbers we haven't seen since 2005, which is a really good thing for our industry. We need more new construction. Along with that, there's going to be a big push to address zoning issues that limit development. If you have ever been to a zoning hearing board or into a planning commission and tried to get a plan approved, you know what a tedious process this is. There's so many government regulations that you have to jump through loops or hoops. You go back and back again, time and time again, and people put on additional costs onto what developers and builders are doing. The message is starting to get across. Legislators are waking up. Housing affordability is linked to housing supply. And if the housing supply is depressed, which it is right now, housing affordability becomes an issue. I know personally, this past year as president of our association, I had the opportunity to sit at a number of different luncheons with legislators in our area. And I'm telling you, one of the number one things that I brought up at these legislator lunches is the cost of development is soaring out of control. There has to be more done on a local level to reduce the costs, to get these things through the system much quicker than what they are. You know, the local legislators blame DEP, which is a national organization. DEP blames the local people. We all got to start working together. And I think there's going to be a bigger push this year for those type of things to get streamlined. However, it's not going to happen overnight. If you know anything about our government, once they make a decision to do something, about 2 years from now is when it actually comes to fruition. So I believe it's going to happen. It's just going to take a little bit of time. Climate change will start to seriously impact where buyers choose to live. Now, before anybody goes haywire here, I am not making a political statement. That is not what this is about. This is coming from an economist, a trusted real estate economist. And whether you believe that climate change is happening or not, a large portion of our population does, and it's going to affect where they live. And we need to face that reality. So whether you believe in it or not, set your feelings aside. Understand that a portion of our population wants to know about this stuff, and it is affecting where they are making decisions to live. So climate risk data is starting to become more readily available, and get ready for the younger home buyers out there to require more of this information. This is the generation that's looking at this much closer than my generation, because they have years and years and years to actually live in the climate where they're going to be living. Lenders are increasingly using something called blue lining to assess risk of natural disaster without clear disclosure, and this can impact the mortgage rate that buyers are offered. Now, before you all panic on this call and say, God, this is one more thing that I have to worry about, I did have a brief discussion with Dan and James on this. Blue lining really isn't prevalent in our area. It's more prevalent in areas that are prone to wildfires, to flooding and those type of situations. Essentially what blue lining is banks and lenders are looking at a map, and they are drawing a blue line around neighborhoods and areas that they say, listen, if we're going to take a loan in here, it is subject to wildfires based upon its location. And because of that, it could impact the mortgage interest rate. I don't think it's going to be here anytime soon, but if you hear the term blue lining, you know what it is. And if you haven't been to these websites, I would encourage you to go to the websites now. I think there's going to be more and more people visit them over the years. The first one is called freehomerisk.com. And the second one, which, by the way, the second one I've been aware of now for probably 2 years, is called floodfactor.com, where you can hop on websites. I'll deal with the second one first here. You can hop on websites and you can actually see what the risk of flooding is on your particular plot of ground. Now, the first one, which I was unaware until I read this article, called freehomerisk.com. And because I have an inquiring mind, I wanted to know how risky my home was. So I went to that website, plugged in my address, and this is what they look for. Now, some of this stuff is a little small here, but I'll get to the next screen in a second. Some of the things that they look for here are earthquakes, radon, volcanoes. By the way, there's no volcanoes that are in Hummelstown. But you can see some of the things that they're looking at here, where these are risk factors of living in a certain area. Now, I'm going to show you the actual report card from my home on freehomerisk.com. So here's mine. I got a lot of A's and B's, which I felt really, really good about until I saw some of the F's and D's, like D for radon. I know the area in which I live is on a rock pile, literally is on a rock pile. So I know it is a high radon area. So that's a true statement. I didn't know this, but 2 or 3 of the things here deal with high winds, which we do get high winds in my area because things come down over top of a mountain, which I thought was interesting. I got an F for special wind region. And one thing that really I thought came into play, which is totally false at this point in time. If you look at the very last one, I got a D because I'm located next to a nuclear site, which is 3 Mile Island. Well, they haven't updated that information in a while because 3 Mile Island was put in mothballs 2 years ago. So I'll probably get in touch with freehomerisk.com and increase my nuclear site rating. So obviously there's some bugs here, but do yourself a favor, plug in your home address and see what comes up for your home address. I think there's going to be more and more people look at these type of sites as time goes on. Urban markets are ready to bounce back. Even though earlier on you saw people are migrating to the suburbs, when they are migrating to the suburbs, what happens to the homes? There's a lot of vacant homes in urban markets. And what's happening is there's people that are infilling back into these urban markets. They're becoming more accessible to a larger set of potential new residents. I don't think we've seen the impact in the change in work demographics yet. This is where people are now, they have these policies at work, which I just talked about a second ago, where they can go ahead and make some real estate decisions based upon what their work policies are. I think once these start coming down the pipeline, you're going to see more and more of this affecting our urban markets. A resurgence of foreign investors. Now, I got to tell you, Lancaster County is not a big foreign investor area. However, we do have people that buy homes here in Lancaster County that are out of this area. Prospective buyers have been sitting on the sidelines since the pandemic began. And since the travel ban was lifted back in November, they're now starting to trickle back into the marketplace. These, by the way, these were the first people, the first demographic to really use the sight unseen offer that we saw prevalent during COVID. And expect to see a significant rise in demand of these foreign investors. Some other good news, first-time buyers are going to be even a bigger factor in 2022. And why is that? Look at this statistic here. 4.8 million millennials will turn 30 this year. And that's the median age of a first-time home buyer in America. So we're going to have a large portion of the buyers out there that are really buying for the first time. And because they're in that demographic of millennials and they're now 30, they're going to start looking at purchasing real estate, which is a good thing for us. But then it gets back to where's the inventory? So it's kind of, all these things are kind of related to each other. And finally, his 10th trend, forbearance will end, and it's in the process of being put in mothballs right now, but it's going to be okay. Just take a deep breath. It's not going to be as bad as what everybody was predicting. Right now, at the present time, there are fewer than 900,000 owners who are still in this program from the peak in May of 2020, where there were 4.8 million people. So it's been reduced a lot in a very short period of time. And those people that weren't making payments during the forbearance period and are still in trouble because they can't make those payments, what's happened to their home price over the last year or two? It has gone like this. So chances are most of these people are not going to be underwater with their houses. So you're probably not going to see a lot of foreclosures. So the increase in equity positions has been a really good thing. Okay. So these were this guy's 10 real estate trends for 2022. I thought there was a lot of good nuggets in here that I thought I'd share with you today. I usually end up my meetings with a quote, but I saw something that was published by Warren Buffett that I thought I'd share 3 different things with you that he said about successful people. So these are 3 life strategies of most doers and achievers. Here's his first one. Learn to say no to most things. The difference between successful people and really successful people is that really successful people say no to almost everything. And that's true. Think about how much is thrown at you on a daily basis, either via email or somebody trying to sell you something, or this is the next greatest shiny object that you need to have in order to make it in this business, instead of just focusing on some basics and just having a plan. So learn to say no. Number 2, surround yourself with people operating on integrity. It's being someone who will display uncommon honesty, treat others well, reject political divisiveness, and bring people together to achieve real results. These are the people that you want to have around you, working with you on a daily basis. And number 3, he says, increase your knowledge daily. The key to your success is to go to bed a little smarter each day. And he looks at it, it's kind of like compound interest. You keep sticking things up here, and over time, it's going to pay off for you. So those are Warren's 3 life lessons. Hope you got something out of the 10 trends that you can share with your buyers and sellers. Have a great day, everybody. And hopefully, Sarah will have some really neat things for Pi Day coming up. We'll have a great time. Take care.